Good morning. I hope we're all good. Um, Sorry about that little delay there. I was just having a read of the Bank of Japan's monetary policy statement. Just to get a feel and a grips of what we might be expecting over the coming month. Nothing really out of the ordinary, to be honest. Nothing that was wildly unexpected. I'm sure if we take a look through, the yen remains pretty much unchanged as a result. So nothing there that's really too strenuous. There's a couple of things to run through. Obviously, we saw some pretty big movements yesterday. Aussie dollar broke above that 77.70 region. And we saw a quick fire in to 78.50. So fair play to anybody who managed to catch that. I must admit, I haven't actually paid too much attention to gold. No alerts had sounded, so for me, it's just pretty clear that we were just chilling around, not really doing much, which is pretty much what we can see here anyway. So I'm fairly comfortable with the fact that I'm probably not going to look to enter any gold positions this week. Dollar CAD, we broke through. I had a pending order set at 24.50. Obviously, we broke through that yesterday morning. We were just talking about the possibility for breaking through that level and what that would mean. We broke through and seen a drop into 23.80 yesterday. So again, fair play to anybody who managed to catch that. Looking into this morning, I would very much anticipate a retest of around about 24.30, 24.40. Where we will see where we go from there. There is a Canadian Bank of Canada speech later this afternoon, about 3 o'clock, I want to say, that we need to be mindful of. Oh no, 9, should I say, 9 p.m. And there is OPAC meetings today. They have been moved from Wednesday to today. So expect some volatility surrounding the Canadian dollar, the yen, the New Zealand dollar at some point throughout today as all that kind of unfolds and unravels. But as things stand at the moment, pushes up towards 24.40, 24.50. Rejections away. Lead us back into those potential shorts. Anything else, then we would need to break back below 23.60, 23.50 now before we can look to take a continuation in the short, unless, like I say, we receive some form of rejection away from 124.40, 124.50, that kind of area. You can potentially take a position if we were to break the lows here at 23.80, but with 23.50 or 23.60 acting as our potential entry zone anyway, and the fact that that gives you literally, because you're going to need a 35, you're going to need a 40 pip stop loss as things stand at the moment, or you could get away with like a 25 pip stop loss if you're feeling adventurous, just to put a stop loss just above the highs, above the lows, to try and, so around 24.05, somewhere around there. But realistically, I would say that 124.30 is, or 124.20 is the likely area that you'd want to actually place your stop loss at. So the risk to reward on that down to that 23.60 or 23.50 region, that little zone, just doesn't seem to be there. So doesn't overly hold much in the way of wanting to take that potential position. Aussie dollar breaks back below 77.50 will give us the short. Breaks back above 78 will likely give us longs back up to 78.20, although you can wait for that region to go if you so want to. But we got the rejection we were always expecting. Oh, sorry about that. always expecting to see at that region. So once we had kind of pushed away from that level, then it was pretty obvious to us the way that this was going to play out and how this was going to go. So breaks back below 77.50 definitely open up the potential for those shorts for sure. CAD yen, obviously we broke back above that 86.60 level. Anyone that was part of the newsletter and read that or just paid attention yesterday will know that we were looking to long it above 86.60 up to 87.20. That was found. We came as high as like 87.40. We're now just floating around. So if we pop back through, that will play into that US dollar CAD retracement that we're potentially looking for, and also see a pullback into that 60 region, giving ourselves a potential another entry from that area, or we can short it. If we get a break back below 87.10, then I will probably look to short just for at least the short term, potentially come back down towards that 60 level if that was to give us an entry. 2 to 1, probably place my stop loss around about 87.30. Just to see that pullback and retracement that I think we clearly need at the moment. So that pullback into that 60 region before seeing potential drive back to the upside. I don't see enough about it at the moment to want to take potential longs. Maybe above 87.40. If we were to break back above the previous highs now, we could take longs back up. This is where we start to get involved in that potential longer term position up towards 89, 89.20, that kind of zone, that little pocket that we have there. Naturally, we would need to be extremely mindful as we kind of approach this 88 region, 88.20, 88.50 in that pocket, just for any potential pullbacks. But even then, that should just come back to our original entry point before pushing back onto the upside. So we shall just keep an eye on that. I'm going to just go and have a look at Euro Swiss. We are trading around 110.50 at the moment. Sorry, this is purely off the basis and the back of the euro moves that we saw yesterday and have seen a little bit this morning of. I just want to see what the potential is for getting back below. As things stand, the 4 hour looks nice for it, but it was still an hour and 20 minutes before that closes. Potentially though, Euro Swiss shorts below 10.50 makes sense, but I would be more interested in potential long positions away from it, which doesn't play very well for the fact that I am euro dollar short at the moment. Not really a trade there, if I'm honest. If we break back below 10.50 and we get some form of confirmation that we are failing to make this high, then realistically I'd want to get below 10.30. If we can get below 10.30 on Euro Swiss, there probably is a short option there. Back down to 10 and then at the bottom of the whole number there. So we'd just be mindful. Rejections away might give us that potential long back up towards 111 and 111.50, but it's still very choppy. I would actually prefer the CAD yen short that we're looking at, or long, either way. But just looking at this pair, it looks like we've got more chance of an entry. Let's just cover Euro USD quickly. We broke away. We rejected yesterday from 21.20. We broke back below 121. I had an entry there and I closed it around 70, I believe. And then re-entered again at 20.90 last night, or to be precise, around 86, I believe. So currently short in this pair at the moment, running a little bit in profit, a little under 20 pips in profit. we're chilling around this 70 region. Now, this 70 region was where we were always expecting a pullback to. For anybody that read the newsletter or watched yesterday, we were looking for that pullback into 2070. And then obviously the potential push away from that region and that level. So we saw that drive back into not quite 121, but into 120.90, so the area of support that we've got through here. We rejected, so we took the short yesterday evening. And then obviously at the moment, as things stand, we're still trading below this level. Pops back above the 90 level, discount all potential short positions. That is pretty much going to seal the fate on the fact that we are heading back towards 22 and 22.50. But for all the time that we are trading below 21, we have that potential for shorts back into 2050, or even potentially lower into kind of 120.20 again, and the previous support that we had seen around that region. So we will keep an eye. I think a lot of this depends. There's not really euro data out this morning, I don't believe. Nope, nothing. There is consumer confidence for the US later this afternoon that might cause something, but we'll see how we play and see how we go. But as things stand at the moment, I think shorts below 2050 make a lot of sense into 120. All the time that we are below 21 or 2090, fairly comfortable with looking into short potentials. Above that though, that short bias has to be abandoned and run into longs up to 122.50. So we will just keep an eye as things stand, keep watch and see how we progress. But for the time being, the real troubling part of this is obviously the fact that we are just chilling in this indecision at the moment. We're not really seeing too much movement, so we'll probably come back to this in 15 minutes, see how we are progressing there, and see what is the most likely scenario for us as we move throughout this morning. The pound pairs I do want to visit because they have seen some volatility come in this morning. Pound New Zealand, yesterday obviously we, and not just yesterday, but certainly as part of the newsletter, we were looking for that drive into 93.20 and that push away. We saw that, and obviously it flew all the way into the 91.80 target that we were looking for. Now, the pullback into this 92.60 region makes a lot of sense. Rejection away from that will give us the potential to short back down to 91.80 again. But really what we're looking for now is a break back below that region. A break back below 91.80 will give us that short drive back into 190. So there's still 180 pips on offer from that position. If we were to break back above 92.50, so 92.60, that kind of region, if we can pop up above probably 92.80 by the time we actually get an entry, then that will probably give us long entries, and we'll probably look to long the pair up to 194 before seeing how we react and respond around that. Looking at Aussie dollar and the fact that that has weakened off ever so slightly this morning, it would make sense that we are probably likely to see some form of a return as well for this pair. Yesterday morning, obviously, we were talking about the potential to drop back through the 78.80 region. We found our way through that and obviously saw a subsequent drop into 78.20. A little bit lower, but that 78.20 region is where we're currently trading, and that is the important level for us. All the time that we're above 78.20 at the moment, long positions back to 79 or 78.80 make a lot of sense currently. If we can break 78.80, then I would have said that we are likely to break 79.20 and see a push back up to 180. But for the time being, all the time we're above 78.20, the long bias is going to take hold at the moment until such a point where we break through. We would need to get through 78.20 as a bare minimum to want to enter on potential shorts, but realistically we'd want to clear these lows at 77.80 before we actually were taking positions. The risk to reward there just doesn't seem amazing until we get back below that, just from a probability point of view. If we take a look at the 4-hour time frames and look from that 80 region down, you have the potential for about 90 pips. So let's just say around about 85 pips. You're going to need at least a 40 pip stop loss, because you're going to need to have this 20 level acting as our support, as potential resistance. And see that role reversal from that level of support that is acting as the moment. So we need to get around that and need to navigate through that region as things stand. Until we're through that, then there's not a lot that we can do at the moment. So we just need to be mindful of that. Pound CAD, another one that saw the drop come yesterday from 73.50 that we were talking about yesterday morning. Drop through, almost no drawdown, all the way through into 72.80, and then obviously further than that down into 72. So you had 150 pips, or a little over 120, depending on where you managed to enter yesterday. Saw a pullback. We're just seeing the pound, as you say, across all those pairs at the moment, chilling in some consolidation. We're not really seeing too much in the way of potential directions. For the pair now, getting below 71.80 is the big deal. If we can get through 71.80, then the shorts should prevail from there. At the moment, we're just trapped in a little bit of no man's land. Shorts below 71.80 going to lead us into shorts back down to 70.80, and then 70 whole, and then 70 whole number. In extension to that, if we pop back above 72.80, then like I say, back to 73.50 and beyond from there. Those levels, that little ladder system working very clearly there. So it gives us quite a lot of potential entries. Pound US dollar is the last one that we were looking at for the pound. Obviously, like as we see across most of the dollar pairs, we've just seen a little bit of strength come in, but that's not seeming to hold at the moment, which isn't the ideal situation for us. Looking at the 4 hours, we looked as if we had that potential for that new swing forming yesterday, but that doesn't seem to have come to anything really at the moment. Just looking to the left, I don't think you can really comfortably take a short now until 78.20 is taken out, 38.20 even. Once 38.20 is gone, you could probably look to short it, but I would have said anything above 139 you'd probably want to long back up to 140. Yesterday, obviously, we were talking about being in this little no man's land between the window, but I would have said above that, 39.20, you can long up to 140. Anything below 38.20, you can short back down to 37. So there's a few scenarios on the pair. Obviously, we've established this little bit of support around 38.60 as well. So if you wanted to, you could short from 60 down to the 20 region if you're a little bit happier with your risk. If not, then you're going to need to wait for that to go. But there's definitely potentials either side of 39.20 or 38.60 for it to lead into some form of a push for us. Euro USD, we're still floating about, and like I say, anything below 20.50 will give us those shorts. Anything above 21, we need to start looking at longing up to 22.50. Not comfortable pound dollar at the moment. I want to go pound back to pound New Zealand. And that rejection away from here. CAD yen, we know our entry. Dollar CAD potentially pushing away from 24.40 or back below the lows, but probably wait till the 60 level goes. Aussie dollar below 77.50. So there's a few things to go through. It doesn't need to be a particularly long session, just because yesterday obviously we had quite a big day, saw quite a lot of movement and quite a lot of pushes. So we just need to let things play out this morning, see where we go, and not rush into anything, give back any profit from yesterday. Yesterday was a big day. Hope everyone's decent. Obviously, we're going to come into the end of the month and the end of the month corrections that we intend to see. So we do need to be mindful of that. But apart from that, I hope everyone has a decent day, and I will catch up